Assalamualaikum. I present the subject BBCF 4023 Investment Analysis. Module lecturer Mr. Wan Muhammad Afnan, program BBA ODL. Assignment 1 Group 2 Assignment Submission deadline 1 August 2024. Our group 2 is Muhammad Arif bin Ilyas, Zahri bin Abdul Ghani, Arian Saputra, Wariampa, Ahmad Mustaqim, Iwa Shini. Getting started as a fund manager, duty and responsibility of fund manager. A fund manager is a responsibility for overseeing investment portfolio topical on behalf on institution, investor, or individual client. Portfolio management marking investment decide to achieve the fund objectives and optimum return. Research and analysis conduct through market research and financial analysis and risk assessment to inform investment strategy. Assess allocation assess across different investment which is stock, bond, derivatives to diversity risk and maximum return. Client relation, communication, investment strategy, performance update and managing client. And then compliance ensure investment equity comply with legal and regulatory requirement. Training and experience requires to become a successful manager. Typically requires first education, a strong foundation in finance, economy, or related field, often backed by a bachelor degree at one degree, such an MBA or CFA. Chartered finance analyst designation can achieve career ability. And then experience, progress, responsible role and finance, starting with analyst position, then move up to profile manager, experience in sector relevant to the fund focus, example technology, healthcare, and advantage. Qualities and talent of a fund manager. Key attributes include analytical skill, ability to interpret complex finance data and market trend. Second, decision making informal strategy decision under pressure. Risk management, evaluation and mitigating investment risk. Communication, and then communication, clear and effective communication with client, team member and stakeholder. Adaptability, flexible to adjust strategy based of market dynamic. Ethic and integrity, upholding ethical standard and fiduciary responsibility. Challenger and career path. Challenger for fund manager include market volatility, regulatory change, and meeting performance expectation. career progression, typical evolver, first starting as a finance analyst and associate, and then advanced to portfolio manager role with increasing responsibility, and then potentially move into senior manager or founding their own investment fund. Example of.
Hello everyone, my name is Ahmad Mustaqim Mustafa. My student number is 202201D410. Today I would like to present my task number about asset allocation and portfolio. Asset allocation and is a role in managing a portfolio. Asset allocation involves dividing investment among different asset categories like stock, bond, and cash to balance risk and return. It aligns investment with financial goals, risk tolerance, and time horizon, optimizing portfolio performance. B. Important factor in asset allocation. 1. Risk tolerance. Determine the level of market volatility an investor can handle. Number 2. Investing objective, financial goals, guiding the choice of asset. Third, time horizon, the period before needing to assess investment, influencing asset selection. Fourth, market condition, economic environment impacting asset allocation decision. C. Significance of a diversification, spread investment across various assets to reduce risk. It stabilizes portfolio performance by offsetting losses in one asset with gain in another. D. Benefit and drawback of asset allocation strategies. Number 1, strategy asset allocation. Long-term target with predict rebalancing, easy discipline but may underperform in changing markets. 2. Tactical asset allocation, short-term adjustment based on market condition. It can yield higher return but involve higher risk and cost. Number 3, dynamic asset allocation, continuous adjustment, is it adaptable but requires constant monitoring and incurs higher fee. E. Asset correlation and its impact on asset allocation. Measure how assets move in relation to each other. Low or negative correlation reduce risk, enhancing diversification and portfolio stability. I hope you guys enjoy my presentation today. Thank you. Bye.
Hi you all, how are you? My name is Harian Saputra bin Mawardi. My ID number 202201D40031. Standard deviation and expert performance. Number 1, standard deviation. Standard deviation measures the dispersion or variability of returns around the average return. Measure the level of risk associated with an investment. A higher standard deviation indicates greater volatility and uncertainty, while a lower standard deviation indicates more stability. For example, consider two investment options. Option A with a standard deviation of 10% and option B with a standard deviation of 5%. Option A exhibits higher volatility, indicating greater potential for both higher returns and losses. On the other hand, option B shows lower volatility, which implies a more stable and predictable return pattern. Number two, expected return. Expected return represents the average return an investment is expected to generate over a specified period. It serves as a measure of the potential profit or loss associated with an investment. Investors often use expected returns to evaluate the attractiveness of different investment opportunities. For example, if an investment has an expected return of 8%, it indicated that on average the investment is expected to produce a return of 8% over a certain period of time. These metrics help investors assess potential investment returns and make informed decisions based on their risk appetite. By combining these metrics, investors can assess the risk-return ratio of their investment. A higher expected return may be accompanied by a higher standard deviation, indicating a higher level of risk. Conversely, lower expected returns may be accompanied by lower standard deviations, suggesting a more conservative investment approach. It is important to note that these metrics alone do not provide a comprehensive assessment of an investment's risk and return profile. Other factors such as correlations, diversification, and market conditions must also be considered for a holistic assessment. Standard deviation and expected return are important metrics in risk-return evaluations. They offer valuable information about the level of risk and potential return associated with an investment. By understanding and analyzing these metrics, investors can make informed decisions aligned with their investment objective and risk tolerance. See you. Thank you.
Assalamualaikum, my name is Muhammad Arif bin Ilyas, student ID 202205D40006. Stock, bond, mutual fund, exchange trade fund, and alternative investment are some examples of different investment vehicles that you can compare evaluate. 1. Stock, and 2. Bond, and 3. Mutual fund, and 4. Exchange trade funds, 5. Alternative investment. Stress the importance of costs and fees when evaluating investment product. 1. Impact on returns. 2. Type of cost and fee. 3. Important in long-term wealth accumulation. 4. Consideration when evaluating investment products. 5. Impact on different investment vehicles. Find any legal or regulatory issues that are pertinent to investment analysis. 1. Security laws and regulation. 2. Investment advisor. 3. Investment company. 4. Dodd-Frank Wall Street reform and consumer protection. 5. Anti-money laundering. 6. Global regulatory frameworks. 7. Compliance and risk management.
Hello guys, my name is Hivashni Anaparpar Ravindran. My student ID is 202205D40009. Today I'm going to talk about Vanguard Total Stock Market, which is known in short form as VTI. So VTI or Vanguard Total Stock Market is an exchange traded fund designed to keep on track of the performance of the CRSP US Total Market Index. This index is included nearly 3,500 stocks of all the sizes across various sectors, which provide a broad exposures to the stock market in entire US. So which I also allows individuals to diversify their profile and reduce risk by investment across the wide range of companies. Which I also lowers expenses ratios compared to actively managed funds, and it makes a cost effective option for those looking to invest in stock market. So which I will be the best option if you are looking for cost efficient fund investment in stock market. So about the past performance of VTI, by investing in VTI, we also will gain exposure to the stock market in US through the fund, and investors also will be enjoying their diversification benefit across sector and market sizes. So its past performance serves as a testament of Vanguard commitment to providing quality investment option for individuals seeking long-term growth potentials. A part of past performance, there is also risk consideration of Vanguard Total Index Stock Market VGI. So VGI also exposes investors to a probability of stocks. So same as other investment, there is also short-term loss of principles in VGI, and VGI has lower expenses ratios than actively managed fund and provides extensive exposure to the US stock market. So even if you are investor that you are funding in VGI, you should be more careful and consider the advantage and also the disadvantage of ETF before incorporating into their portfolio. And also uneven returns for VGI investors may result from changes in industry trends or regulation that affect some sectors more than others. A part of past performance and risk, there is also expenses ratio. So for those who is seeking exposure, so VGI is best market fund that boasts an exposure ratio, making it as an economical choice. So it also has a cost efficiency. It is an
Hi, good day everyone. My name is Varinda Palkok, anak perempuan Iqbal Singh. My student ID is 2022001D40037. On behalf of my group, I will be talking about recommended investment product. So I will go on with how VTI investment fit with a certain risk profile and investment. VTI from Vanguard Stock Market ETF is a fit for those with a moderate to risk tolerance. As for investors, VTI can be an asset in their portfolio. For investors aiming at long-term capital growth, and by adding VTI to a profile, investors can take advantage of growth opportunity, and also for low expense ratio, make it an attractive opinion. By combining VTI with other asset classes such as bond or real estate investment, investors can create diversified portfolio. I will go on with contrast between VTI and SPDR. SPY follows the performance of S&P 500 index, which consists of 500 US companies. Investors interested in the large cap stock may prefer SPI over VTI. VTI provide exposure for broader range of stock across various market capitalizations, sectors and industrial, offering investors more diversification compared to SPY's focus on large capital stock only. VTI typically has low expenses ratio than SPY. VTI may lower tracking error due to broader index composition. I will go on with contrast between VTI and iShares Russell 3000 ETF. IWV track the Russell 300 index contain the 3000 US stock. IWV offer exposure than SPY. It's still narrow compared to VTI. VT has slightly lower expense ratio compared to IWV. Investors who are looking for balance between cap and small cap exposure might consider IWV as a choice. Both VTI and IWV offer investors convenience, may gain exposure to the total US stock market throughout low-cost diversified ETFs. Now I'll be talking about recommendation of VTI. Vanguard Stock Market ETF VTI as an investment opinion for investors. Investing in VTI can give you a rank of exposure to the US total market with a peak. By avoiding the need of active management, VTI passing index tracking strategy guarantees that investors can get profit from the market growth while lowering overall risk and volatilities their portfolios. VTI provided outstanding transparency and liquidity, make it simple for investors to buy and sell share as needed. That's all for me. Thank you.